Major global economies are quietly coordinating a plan to dethrone the two most dominant financial companies on Earth, Visa and Mastercard. High transaction fees, often exceeding 1 or 2%, silently drain billions of dollars from national economies every time a consumer swipes a card. There is also a severe geopolitical vulnerability. Relying entirely on American financial infrastructure means a country can be economically crippled overnight by sanctions, a reality that became clear when Russia was suddenly cut off from the global web. Replacing this duopoly requires more than launching a new app. It involves engineering an entirely new, sovereign financial architecture from the ground up. The global financial web is actively fracturing, marking the end of unquestioned American dominance and the beginning of a fierce race for digital sovereignty. China was the first major market to capitalize on slow, state-run banks and skip the era of physical credit cards entirely. They adopted a QR code mobile payment system driven by nimble private startups. This shift started in 2014, when the social media app WeChat digitized the traditional red envelopes filled with cash that Chinese citizens gift each other during the New Year. By gamifying these transfers, WeChat captured hundreds of millions of users almost overnight. Facing a direct threat to his e-commerce empire, Alibaba's founder Jack Ma launched an aggressive campaign to push his own competitor, Alipay, preventing WeChat from monopolizing the new digital economy. Because these were private platforms operating as black boxes, they developed into fiercely anti-competitive loops. An Alipay user could not easily send money to a WeChat user, creating a fractured market that eventually provoked massive government crackdowns. While China proved an economy could function without physical credit cards, their model demonstrated that relying on private corporate monopolies to build national infrastructure creates dangerous economic friction. Emerging markets observed China's structural mistakes. Instead of allowing private corporations to build closed loops, countries like India and Brazil decided to treat digital payments as a state-mandated public utility. This public utility approach birthed India's Unified Payments Interface, or UPI, and Brazil's PIX system. UPI and PIX function as a sleek, government-mandated interface layered directly on top of traditional, regulated bank-to-bank systems. By forcing large institutions to adopt this architecture, the system achieves true interoperability between any bank, instant settlement, and near-zero fees for users. By mandating a unified, open standard, India and Brazil solved the walled garden problem and successfully established their own sovereign financial infrastructure. Compared to the rapid deployment in emerging markets, the European continent faces a massive bureaucratic headache. A consortium of 16 massive private banks formed the European Payment Initiative, rolling out a unified platform called Wero to directly compete with Visa and Mastercard. But Europe does not have a clean slate. The market is already saturated with deeply ingrained credit card habits, and the continent is fractured across more than 20 different national regulatory frameworks. Wero relies entirely on voluntary adoption by individual banks. Without an iron-fisted government mandate to force participation, its rollout across the continent is painfully slow and uneven. Overthrowing an entrenched financial monopoly requires either a completely unbanked population or aggressive government force. Right now, Europe possesses neither. These sovereign networks are now aggressively expanding across borders to handle international trade without relying on American rails. India's UPI is pushing into international markets, targeting the Indian diaspora, while Brazil is exploring plans to interlink PIX with various other national networks across Latin America. This expansion is causing geopolitical panic in the United States. Former President Donald Trump has specifically threatened to retaliate against Brazil over the domestic success and potential export of PIX. These independent systems are building a parallel global network, turning a domestic tech upgrade into a direct assault on American financial hegemony. Despite this coordinated global assault on their business model, Visa and Mastercard continue to report massive revenue growth and record-breaking profits. The overall volume of digital payments and cross-border e-commerce is growing exponentially faster than these new local systems can capture the market. Visa and Mastercard have also pivoted to selling back-end B2B services, like fraud prevention and tokenization, that even the new sovereign networks pay for. The era of unchallenged American payment dominance has ended. replaced by a complex financial Cold War, where the legacy duopoly now silently taxes the very systems trying to kill it.